Now, joining us to wrap up the day's market moves is Craig Pheiffer from Sasfin Wealth. Thank you so much for your time, Craig. Lots that is happening in the markets. We have the SONA coming out tonight. We also had the continuing deflationary trend in China earlier on, and also the US weekly jobless claims that still signaled quite a strong labor market. At this point, what are markets holding on to?
Well, it's still all about that pivot story. When are rates going to come down? I think over the last 2 months or so, a month and a half, started to thinking that maybe those rate cuts are going to be back-ended or backloaded in 2024. I think that's given the market some reason for a little bit of a pause. I mean, the S&P's carried on a steam, but I think those expectations have been pulled back. When we started the year, we thought the interest rate markets were saying the US rates would be cut by 140 odd basis points, and it's now looking more like 100 basis points. I think we're still looking for 100 from the euro area, 100 in the UK, but mostly towards the back end of the year. And I think something similar for our own economy. It's probably going to be a second half of the year story. So I think that's it. And along with the earnings, we're still in the thick of the earnings reporting season on the S&P side. I think this is probably the last big heavy week, but and then things really taper off. But we've seen some positive numbers coming out of a lot of the companies.
Yeah. Well, talking about earnings, let's go into British American Tobacco. They had their year-end results. Today, the share price surging over 5%. What exactly stood out there for investors?
I think it's we get used to revenue growth is negative, or it's slowing down. Let's not say negative. It's well, actually it is negative, but it's been going down. But they've always over time improved their mix, so they've actually improved their profitability over time, despite a declining market. But the big thing in these numbers was their non-combustible, their new category of stocks, the vaping and the other tobacco products, and those have turned profitable 2 years ahead of expectations. And that in itself added about £400 million to their profits. So I think that was really a positive. It was a fairly positive outlook as well for the way forward. That's the strategies to get more and more into those non-combustibles. And I think, that's what the market liked. The dividend, it's a fantastic dividend payer. The earnings continue to go up. So the operating profits are up nearly 4%, and continually good cash flows, and that dividend is going to stay very attractive.
Well, let's go to the other side of the spectrum. ArcelorMittal, we did see their share price sinking more than 2%, but I mean, it's nothing compared to the share price plummet that we had seen previously with the previous updates. So they came out with their year-end results today. The steelmaker is in loss-making territory. There's just no resting place for this counter in this kind of environment.
No, it's tough. And, just broadly, we saw the platinum miners also giving trading updates today, and Anglo's as a diversified miner. And it's a tough environment. Demand is declining. You've got a slowing China. You've got a slowing US. Those are big. That's a big element of global demand right there, and particularly an emerging market like China. So, in the steel space, the iron ore space, you've had some tough headwinds. And of course, if you've got your own domestic challenges, that doesn't help as well. So, the numbers turned positive to negative, and some big negatives on the earnings per share line. It just doesn't look good, and they're trying to reorganize the business as well to make it profitable. So that's still playing out. But this share is, or the company, a fraction of its former self. at the moment.
Yeah, I also like that you compressed that with the Anglo stable numbers as well, because and really just mentioning the pressure that we are seeing on the PGM side, but also with Kumba Iron Ore having some production reductions there because of the woes of Transnet. Let's go to Cure that released its year-end trading update, saying that it expects recurring HEPS to climb by as much as 37.2%. What do you think of that report card and just generally the private education space?
Yeah, I think there was an element of it that was a bit disappointing in that they haven't got the numbers at all of their schools. So there were a couple of impairments that they brought through or just reduced the book value of some of those schools where maybe the medium-term outlook wasn't as positive as before. So, their bottom line earnings, when you include those impairments, the outlook there is much worse.
Yeah.
But, as they highlight, it's more about, you strip that out, look at headline earnings per share, and then as far as the dividend goes, they look at recurring headline earnings per share. So that still looks to be pretty positive. They've been buying their shares back the last year, about 100 million rand. They still got a strong body of learners, about 73,000. So I think it's a good story, but maybe that was just a little bit of a disappointment in the numbers.
All right. Well, something that is not a disappointment in your eyes at this point, your stock pick for today.
Yes, it's a company that actually reported earnings in Europe today, Siemens. It's a company that is actually trying to help other companies around the world. That's their job along the ESG path. And really also at the cutting edge of technology. They've got a digital industries business. They've got a smart infrastructure business, helping build, greener buildings and environments in cities. They've got a mobilities business, which is, more about trains and rail and rolling stock and the like. And then they also have own 3/4 of Siemens Healthineers. So that's a medical business, also at the sort of cutting edge of technology. So, it's nice and diverse. All the business parts don't always fire at the same time. That's why you like something that's diverse. So the digital industries business had a bit of a poorer quarter this time. But the share fits into our mold of quality and growth. And it's really had a great run. It looked to be a little bit in the doldrums for a while, but it's certainly come back. And as a tech stock, it's running with the big dogs.
All right. Well, thank you so much for your time and for your analysis on what has been driving the market today. Craig, that was Craig Pheiffer from Sasfin Wealth.